represent Citigroup at this illustrious dinner. Of course, Citi is one of those global banks that is serving millions of consumers, but also a lot of the largest corporations in the world. And therefore, I will look both on the consumer side as well as the corporation side, and therefore the infrastructure side when we look at banking services when talking about fintech. I have not prepared any speech, so I'm just looking at my scribble and hope to make sense of it. But basically, in my day-to-day job, I look more after regulatory strategy for the bank, because of course all these developments are impacting the way we serve customers. And I would say, from personal experience in the last few years, the topic of innovation and financial technology has really come to the fore in the day-to-day business. But I would like to just remember also, according to the previous speaker, financial technology exists for a very long time. It was the mainframes of IBM, it was the technologies of spreadsheets and all sorts of things that were part of financial technology. And we've really seen the growth in innovative ideas in this space come up in the post-crisis environment after the financial crisis, almost starting also with Satoshi Nakamoto's launch of Bitcoin, which of course was kind of shocking everyone because it suddenly meant you didn't need banks anymore to transfer value or whatever you thought value may be. So that was a real seizure, and I think that's why a lot of people and all of us are quite excited about blockchain and distributed ledger, because it allows you to imagine a completely different ecosystem. So of course, in terms of the growth of fintech, is Europe lagging behind or not? Clearly the growth initially started in the US, but I can tell you, and you're probably all aware, in the US also many companies are overvalued. There's a lot of hype on the at IPOs, and a lot of things are maybe not necessarily really what they look like, whilst of course in Europe, and coming back to the earlier comments on diversity and creativity of so many different European countries and citizens, we really have the benefit of having intelligent solutions that are trying to fix problems, whether it's consumer protection, convenience, whether it's corporate efficiency. We really see a much more fundamental approach to innovation in Europe, and therefore it takes more time. And it's luckily not overvalued, so that's a good message for investors, I would say. But certainly we have a lot to look for and give in Europe. Of course, in the crisis context, we've seen initially the emergence of these peer-to-peer lenders and crowdsourcers, because Basel meant that a lot of banks had stopped lending to SMEs and to consumers. And therefore, it wasn't even a competition with banks. Banks just withdrew from this business, and other people came in and realized, oh, lending, there's not such a thing as a banking directive, because you need banking rules for deposit taking, but lending, anyone can do, so to speak. And therefore, we've seen this first wave of crowdfunding and peer-to-peer lending. But then, of course, based on blockchain, we moved into the interesting domain of distributed ledger technology, which suddenly started asking the question, how are our centralized infrastructures operating today? And could we remodel our financial market infrastructure, whether it's the trading and settlement of securities, or the making of payments, or the exchange of trade finance letters, in a very different way, in a peer-to-peer way, or at least in a way that allows data to flow seamlessly and people to really get rid of all the reconciliation issues and the data inconsistency problems that we've seen. And I think we are still on a journey on distributed ledger and blockchain. You will know that a lot of consortia have been kind of developed globally between tech giants and banks and other providers to test different ideas. We haven't got the answers yet, and all of it looks very sort of semi-perfect at the moment, but we are every day taking other steps to find out how things operate and how we can redesign the different elements we have in the toolbox now. And I think that's a very exciting space. I'm researching that sort of academically on the side, and we've actually seen countries like Georgia putting their land registry on the blockchain, and they have a private blockchain and a public one, and they really benefit from the proof of work concept of immutability, whilst of course in the financial industry, distributed ledgers with other consensus mechanisms such as notary functions are more preferred, because people work with other people that are known to each other, so there is trust already. And that actually is even going down to the central bank level. Many central banks say, I'm trusted, I don't need to issue digital currency. But then other central banks are actually looking at how would banking and commercial banking change if you were to do certain steps that potentially could be quite radical. So there's a lot of thinking going on. There are definitely no answers yet, but it already tells you that we live really in this global economy where people are thinking and sharing together. And I think that's very, very important, because no legislator will have the right remedy for specific problems straight away. And of course, what we really need in this digital boundaries ecosystem is regulations that are consistent. If you do regulate, it has to be consistent for the globe, because data flows across the globe without anyone checking where the border stops. And I think that's a very important message. Of course, we have many more fintech solutions. I mean, think about all the efficiencies that can be gained from data analytics. Large companies, whether it's insurance, banks, or corporations, sit on a lot of data they can't make sense of in PDF documents, in copies, and voice recordings. And how about making sure that you actually get clarity from the data you have? You analyze where to find problems, such as credit risk. Have you given a loan to the same person who's been posing as different identities in the bank, for example? Or have you got clarity on how many mortgages you've given to a certain market and how many of those have defaulted? So there's a real big space on data analytics, which is just starting to develop. And I see interesting solutions that I personally mentor in the US, but also in Europe. And this is really early days on some of this, but we have now technology tools that allow these things to develop. Another key pillar, in my view, is cloud computing. If you don't allow cloud computing to strive and ultimately, hopefully, to be public cloud and public blockchain, you're never going to get to that open ecosystem that allows for competition and efficiency. And you need to, of course, make sure that the data is secure. So cloud is an important building block, but given the constraints of data protection liability, it is also potentially a challenge. And therefore, cloud has to be something that is a key facilitator to all things blockchain, for example. Artificial intelligence, many people talk about the word. I recently heard the OECD Deputy Secretary General suggesting that they would like to create an AI framework. It's very early days to do anything on AI, because AI is many things to many people. Again, segmenting the landscape and trying to understand which types of solutions are helping which types of problems is very important. There's the problem with AI, if you rely on past data, you may recreate the same problems in the future. So there are all sorts of things which have to be considered, and we are really at an early stage of development. I mean, Watson is not scalable, but maybe one day will be, and I think that's the sort of progress and research that's actually going on at a fundamental level. We mentioned robo-advice, we mentioned services to help consumers make better financial decisions. We have now in Europe the PSD2, which allows third parties to come along and use the consumer data to provide a better financial intelligence across their accounts, to initiate payments. So this is all about suddenly unlocking the value of data. And I think it's very interesting, because in the European Union, the path was to enable competition, but equally, now that the data that banks sit on for so long is unlocked, banks themselves can use the data, which is great, because actually banks have thought they had to be very careful with data given all the data protection rules, which, by the way, has become a bit tougher. So that's always going to be a challenge. So I think we will see third-party providers flourish and come with new solutions, but also banks looking at how to provide a better retail customer experience. And I think that's a very exciting point, because banks for a long time have not innovated because there was no money, or they weren't creative enough, or they were scared. And I think now there is much more of an innovation agenda in banks. I mean, we've been having innovation labs since 2000-something, but others have actually come to the fore and are joining that idea and are partnering with fintechs. And I think that's another aspect. Fintechs initially were thought to be competing with banks. In many instances, they would like to be part of the ecosystem. They would like to make money, essentially, as well. And frankly, when I talk to some of the fintechs, for example, in the payment space, I say, show me your business model, show me how you operate, do you ever get into possession of funds, what are you doing? And very often, they have no clue that there's laws about consumer protection or e-money or PSDs. And sometimes the business model they developed and the code they launched is completely non-sustainable in the real world, which is also why regulatory sandboxes that test whether someone has to be regulated or not can be a very interesting tool. We've done those mentorings as part of fintech accelerators, but of course the UK has done regulatory sandboxing. We're yet to see the results of that, but other countries like Singapore, Hong Kong, Switzerland have all started to look into the space to create fintech bridges for growth and collaboration between countries. So I think the whole digital revolution is also bringing countries more together, which I think is also very important, because it hopefully suggests that there will be a bit more peace on earth, which is sort of a kind of general important comment I wanted to make in this audience. Now, key criteria for fintechs to grow. I think we already mentioned tax and access to capital, absolutely critical. The know-how, the expertise, universities that kind of feed the fintech thought. I'm even going to be lecturing in May on a university fintech course in Imperial College. We start seeing universities embracing the idea, and that's really where it starts. Plus Business School has similar programs, and you need the stakeholders around. So of course in the UK there's a lot of fintech stuff going on because the banks are there, the insurance companies there, the universities are there, but equally we need to create such an ecosystem in other markets. We've seen a lot of millions of investment going into Germany, which was great to see, into Ireland, into France, and I think it's about creating that ecosystem across the board, including the supportive regulator that listens as opposed to be suspicious as to what these guys are doing, and really tries to understand how to help grow a different type of business out of that. And I think that's maybe something that Europe, every country on its own, but also Europe as a union, will have to think about. Of course, ubiquitous internet is a key point. We mentioned upskilling as well. And of course, then we go into the rule side. We've seen the rule-based legislation over the years being sometimes a bit difficult even for the incumbents to unleash innovation. And I see more and more, even in Commission communications, the reference to principle-based laws, which I've been advocating for the last 15 years. So let's hope to get more principles together. And most importantly, I think the supervision has to become better. I always say you can do the best law and the best rule-based system, but if you don't supervise effectively, you're really creating potentially risks that you're not able to control. So I think supervision and supervisors to learn about these new developments and what they mean is equally important as policymakers and the economy in general. In terms of the legislation, I mean, if we look at distributed ledger blockchain, there are so many unanswered questions. Many of them are featuring in the recent Commission paper, so that's great. And it's probably not possible to answer all of those questions right now. I know that Delaware is looking to provide legal equivalents for smart contracts, but they haven't actually finished their legislative approach. I know that people want to see consumer protection and data protection. The question is whether you want to exchange a lot of data over a ledger or you want to be point-to-point. Homomorphic encryption is currently not scalable, so which technologies do you use to really make it efficient? Or do you have to run parallel ecosystems where you use old rails to share more data and the new ones to share that there has been an entry, yes or no? And I see the value for stock exchanges to see the ownership change, which you can do. But of course, you want to travel much more information when you look at payments. You have global rules on FATF and anti-money laundering. You have to put all sorts of details into payment messages, and you can't lose that detail. You need to make sure that the new technology can also capture this. The other thing, digital identity, we didn't mention either. Europe has a identity legislation that is being implemented at the moment. We don't know yet whether it's future-proof enough. Back to the point, legislation has to be future-proof, of course, but I see digital identity as a key building block to the new ecosystem. And the question is, how will that come about? Can we learn from best practices we've seen around the world? How can we make sure digital identity is future-proof, at least for as long as possible, to make sure that really you don't need to change your technology every 3-4 years on this? And digital identity will allow access of citizens and businesses to services and to basically identify themselves throughout the value chain. Again, this has to be considered at a global level. We have the legal entity identifier as a global one that hasn't been implemented enough, and that is only the beginning, the surface. We actually need a real identifier for everyone at a global level for the internet. And some ideas have been started to be developed, but they're very far away from being launched. And I think that's where people should concentrate on, because if we don't get the whole ecosystem together, we will not unleash the power of the digital economy. And the last word, maybe just cybersecurity, is a very important area where I'd like to see more fintechs provide solutions. It's a problem that we all jointly share. And I think something that I do a lot in the industry is to share information about security attacks and modus operandi to make sure that the attack doesn't spread too fast across the financial system. But cybersecurity is one of those areas where fintech should be supported and new solutions will have to come to the fore. So I don't know if I talked too much, but just a few introductory words.
Thank you.